Good evening, guys. Ken at Taurus Capital Nightly Strategy Podcast for June 30th. Halfway there. Where did the year go? All right, let's take a look at the daily health check. Yeah. All right. Don't use video. Stand by. All right, let's start with the daily health check. All right, I expanded the vertical so we can see that all-time high, that 150-day. That's the 150-day high too, up around 480. So it gives you a sense of the 30-day range. And here's the 10-day range. And then the 5-day range. And then the 1-day range. So that's 5. That's 10. You know, that's the 30. And then the 150 is up here. Puts the Z3 in context, the declining RL270 in context. A little bit easier to see. All right. So we had another no follow through day today. Small range, really just a doji again. It stretched the 5-day range a little bit, but there's still a bit of a cushion to the 10-day low. Very small range day today. We're 21.37% off the swing high. PSAR has still flipped. We're still above the PSAR. Tomorrow, that PSAR will be right about there at 365. So still cautiously optimistic. I mean, the dragon is basically flat. The RL30 is still sloping downwards, so we do not have an owl yet. We have to see the RL30 roll up before we get an owl. Pretty tight trading range between the humps of the dragon and then between the top of the RL30 and the bottom. We are second day into spring. You can see there's the endpoints of the winter. So there is a little bit of cautious hope, but primarily the trend is down. Short-term momentum is down. This was the second day it had a chance to resume the upward move. And for the second day, small range, it failed. That strengthens the case for a sell-off tomorrow, going into the long weekend. Who wants to hold that for an extra day over the long 4th of July weekend? That's a tough one. Tough sell. All right, let's take a look at the sectors. Sort of this one inversely based on price performance, just to get a sense of the magnitude of the sell-off. There's the S&P at minus 0.8. And the Qs were the worst performer at -1.25. The Russell and the Dow, 0.78, 0.72. Emerging markets were the best equity index, -0.47. Here's the the cut point between wins and losses, and Treasuries up 0.88, almost at 115. Only a few sectors were better than the S&P. Biotech -0.7. There's your lumber. Here's the other lumber. Lumber 0.43. Mexico real estate, blended large cap crypto. And then in the positives, lithium, staples, Aussie dollar. And notice even the ones that are winning, they might as well just be flat. Clean energy 0.35 and the VIX at a modest 1%. So that is about as muted a set of leaders as we've ever seen. None of our targets, individual companies, made that list. Sectors that underperformed, energy and materials, tech, Brazil, the other lumber, consumer discretionary, food at -1.55. Now it starts getting really bad. Balked in the fangs, 2%. Energy, 2.11, along with Archienomics. Simon Property Group and Blockchain, 2.9. Marijuana, 3%. So there's marijuana at 3%. Blended commodities, oil -3.13, oil exploration, art, innovation, wheat and precious metals. Even that's not a safe haven. Global future of finance, 4%. Bitcoin and Ethereum, just getting smashed. Individual companies that were worse. Coinbase, 5.5. Alcoa. Now let's look at our metals. There's Cliff, 1.79. U.S. Steel, 3.4. Alcoa, 4.25. So all the metals got smashed. Squarespace, 3.7. Robinhood, 3%. PayPal, Rivian, 2%. Apple and Tesla, 1.8. Microsoft and Devon. So a wide range of underperformers. This does not bode well for tomorrow. All right. Let's look at the reports. Sniper trade of the day. Here's Peak. This is at formerly a Godzilla, has been a continuation pattern for us. This is a healthcare real estate company, and it's been trading really well and continues to trade well. So here's the market opening. Here's a 20-cent standard risk box. That's the R10. It closed here, opened here, rolled up for a moment, broke down through the PSAR. So I took the short on the rollover and breaking the PSAR with a standard risk box here. It sold off harsh, came back half a box. So I just decided to get paid 1. So that's +1. It held support here. It could not get through the dragon, but then held support on that shelf and then crossed the declining PSAR with a stabilized dragon. So I bought that as an SSC with a standard risk box. Just use the PSAR. So if that's 1, that's probably another +1. So total +2 are on Sniper Trade of the Day in Peak. That's a Godzilla. continuation strategy. So we're just staying with it. As long as that continues to make money for us, doesn't bother me. Dashboard number 1, still bullish normal. Weakness, but still somewhat improved over the long term, but the long term dropped back into oversold conditions again. The ADX showing it's getting very close to a strong bearish trend once more. The risk Z is still warning us risk off. It's in a very vulnerable state. If this rolls over here, then this is really bad. In the Max Pains, Alcoa, Caterpillar, Tesla, Nike, there's your energy sector. Pfizer, United Health, Procter & Gamble. So there's some healthcare in the min pains, along with Travelers and McDonald's. Dow 30 daily, small range day today. So there's still quite a few auto framers, quite a few dojis, lots of 5DDs today, as failure to follow through has triggered some significant sell-offs. Walgreens on the index is especially bad, breaking down to all new lows on every time frame: 10-day, 1 month, 3 month, and 6 months. ETF 30, large number of auto framers still, and dojis today. Silver getting smashed. Gold, a breakdown. So that's the opposite of a defensive play there. Metals and mining and oil exploration, those things have really turned negative. So you can trade them, you just can't fall in love with them. Auto framers, plenty to choose from. Again, here's your framing data. Mechanical entries, initial stops, initial targets for a 10-day high. Here's your R multiples based off of the chosen risk and a test of the 10-day high. So you get everything above the line here is better than 2-to-1 on the reward to risk. DuPont and Caterpillar, there's an oil exploration and food. Chevron Energy, blended commodities, so the whole energy sector, better than 4-to-1. Cliff and US Steel, so you know I'm going to be on those. There's Brazil and Materials, Alcoa, and Tesla. Lots of our standard plays, all making this list on the auto framer. That should be carefully managed. I would not hold the swing trades over the weekend. I'd be willing to trade them one day at a time, though, intraday, with a turbo strategy. That's what it was made for. Only one daily squeeze in United Health. Just interesting to note how lack of volatile Tesla has been. You know, it's in the 5th position here on the squeeze. That's a good thing for Tesla traders. In the regression line fractals, I just want to highlight US Steel is 8 ATRs below its long-term fair value as measured by the RL270. Apple's in a good position, as is Walmart, 5 ATRs below their fair value. Metals and mining suffering. Food, 7.5 ATRs below its long-term fair value. The overheated ones, Merck, Johnson & Johnson, United Health. And their reward to risk is essentially, these here are basically right on their fair value. That's how bad everything else is. Merck and Johnson are 1 and 2.8 ATRs beyond their fair value already. So that's how you read that. Sniper setups from Sniper headquarters here. Walgreens, Nike remains interesting. Getting smashed in here. Large 5-day volatility. Here's our cut line between abnormally quiet and abnormally volatile. So these are the stealth Godzillas in this stack, and these are the raging Godzillas in this stack. In our tactical symbol set, marijuana, Alcoa, one of the lumbers. Here's the cut line between raging and stealth. I like that Alcoa is a stealth Godzilla, so I'll be on that one. Had a nice trade today in General Mills. That remains a fireworks with a very volatile 5-day. Today's move, though, was not an explosive breakout. So that almost feels like big breakout, small continuation. It almost feels like it's satisfied and that there's a lid on it. And so that makes it at a critical state. It could fail or it could be resuming. But there was not the great big explosive up move. We'll see that in a sniper trade. That was a tradable move on a continuation grind. The fence sitters, these are the ones that are, between 0.4 and 0.6 on their weekly and dailies. And only FDX is raging. All these other ones are stealthy fence sitters. And the 1-day range ready to, these are all small with the exception of CNP. That may be the one that's starting to make its move with a large 1-day Z-score. In S&P's most quiet, these are on the basis of the 5-day, and the most volatile also on the basis of the 5-day Z-score of volatility. I'll let you farm those yourself. And we've seen that one. Here is our that little recovery has given us a lot in the spring, many in the winter. Only healthcare and Boeing kind of in the explosive summer with strength. This is our tactical symbol set sorted by 5-day volatility from most to least. There's Microsoft, Brazil, lumber. At the top, Amazon, Simon Property, Clean Energy, Finance. You can also scan this 1-day, and what you'd be looking for were things greater than 1. Like Amazon had a volatile day. GDLC had a very volatile day at 2.67. So this is a way to quickly sort or to scan for things that compared to their previous moves were extraordinarily large. And on a quiet day, a move like that in GDLC gets your attention, as does Finance. And food. Notice food has really been bad on the 30-day and 10-day, and then had a large adverse move today. Multi-time frame NDXs. You can see that U.S. Steel and Walgreens both just collapsed across every measurable time frame, as did silver and blockchain. In addition to the short-term pain and suffering, those were significant breakdowns. And when U.S. Steel is in that condition, you know that I'm going to be on that one. Pfizer, on the other hand, in healthcare, had an interesting day, as did treasuries. Again, I'm looking for significant extremes. So two little dojis, but it's still decaying, and we're almost back to that support level after it couldn't maintain that first leg up off the bottom. We'd be hoping for this as a test of that, but it didn't. It has rolled over. So now if it breaks below here, 370, look out below. Ugly. All right, that's enough for that. Let's take a look at sniper trades. All right, here's this was peak. That was the sniper trade of the day. We already saw that one. Routine for 2. This is ARE. This is the other healthcare real estate guy. And it was, again, just like peak. We found that from a Godzilla, and it has just been trading very nicely intraday. It's like a, almost like a frog champion in that sense. I'm using about $1 standard risk on it. It collapses. Here's a dragon. It collapses below that. So when it moves a standard risk box from the top of the dragon, I just buy it, or short it, I should say, sell it. Starts to recover. So when it moves about half that risk box off the bottom, just get paid for +1, check or hold. Dragon leveling out. I take that as an SSC. It hits the PSAR. So the dragon levels off. This little rising low feels favorable, breaks through the dragon. I'm waiting to see it cross the declining PSAR. Here's where it does. So I take my entry. Standard risk box. That's this box. It really has to get above this hump of the dragon to be especially interesting. Almost interesting. By this time, I forget how this turned out. All I did at this point was so that's 1 unit of risk. So that's about 2 are in hand. So I just put the stop in here and was going to trail it with half a box. And I don't care what it did after that. Standard play, check or hold. I mean, those 2 trades right there, healthcare, real estate. Healthcare has been great. It's real estate. It's going up. All the market's going down. It's trading very orderly. It still has plenty of room to go because the Godzilla tells you, look, this thing has been beaten down on 3 different time frames. The 150, the 30, and the 10. That thing is down there in the bottom of those. And if it doesn't collapse and starts to make that slow climb up, there's a lot of room for it to go up to get, gathering conviction and people that are waiting for confirmation of the moves. And that's what you're seeing now is all these people that are beginning to be convinced that maybe it's not going to collapse. So I don't care. The more of them, the more the merrier. Godzilla is buying the low risk trade down here. Now, if it collapses, we know how to do that with collapsing dragons, but when it refuses to fail, that's what happens with the Godzilla. You can get these long moves, and ARE and peak are both in that condition. Two members of the S&P 500, so they have a lot of liquidity and institutional ownership, but they're not so large that that you're seeing any kind of like news articles or anything like that. It's just quietly tradable, getting things done. So those are the kinds of things I'd like to have in my tactical symbol set. If they continue to trade well, I might do that. Replace some of that crypto junk. All right, here's Devon Energy. I'm using a 50-cent risk box. Blue line is the open. I let the, this is what I call this technique, the OR5, where you let the 5-minute bar print, and then it continues and breaks out higher than that. So I buy it. Standard risk box, check or hold. So you may see that in the future. OR5, opening range 5. Or if I'm on a 3-minute, I would call it an OR3. I let that first bar print. There is some, there have been studies on some trading studies that on the OR5 is pretty good. And then also the OR60, opening range 60-minute. That's sort of the idea behind the triple screen. When you wait for an hourly breakout, that's also, so that OR60 is also kind of like a slow frog in that sense, in that it waits an hour and then uses that as the breakout box. So here we are. So this is Devon Energy. About an R. PSAR breakdown. So here's that PSAR. That's where it crosses the dragon here, hits the PSAR. So I'm short with a standard risk box, which takes it to the top of the dragon. Check or hold. I come over here and I see the bottom of the dragon right about there. So if it breaks below here, that makes it interesting. Otherwise, this is just tactical space in here where I just maybe can get paid on something that just drops, but without a runaway panic. Yeah, kind of rejected that. Didn't really fail much further. I probably gave back more than I needed to. That's one risk box. That's at least one risk box. I probably gave back too much on that. I probably should have been here on this. So when it moves off the bottom and closes here and then opens here and starts going up immediately, that would be giving back one full risk, and I gave back 1.5. So that's pretty sloppy. I mean, I kept one, but this was almost 2.5 in my favor. So that's about a D exit. I think what would you call this entry? Harsh sell-off. reverses, crosses the dragon, hits the PSAR, SSC. It's really got to get above this and this to be very interesting. And again, my job is to figure out how soon I can get this risk, up to about here so that I can lock in. I want to be able to lock in that much for no lose plus dinner for two. Fail. Take about half an hour loss, check or hold. Now, this is one where, the collapsing dragon is right here. Let me draw that in red. This is where the collapsing dragon entry would be. The PSAR is still way down here. That's clearly where you want to be short, but you could consider a short on a break below the dragon. Check or hold. Nope. So instead, it holds higher than this. So that feels like a kata 2. So I buy a 1, 2, 3 entry. It rolls over. I take half an hour loss. Check or hold. Just do what I'm told. I think of that as a kata 2 again, because this low is here. That low's a little higher. It crosses the dragon. Standard risk. Scratch. So this was net, let's see, plus that, minus this, minus this. So this was maybe +1 total. Kind of a grind. Microsoft, I'm using $1 of standard risk. Blue line is the open. Everything was collapsing already. So this was the, oops, let me draw that better. So this was that opening range 5. So when that breaks down and goes through the PSAR and the dragon and goes through the dragon, that's a natural short. Take this risk box. That's my standard risk. Check or hold. Standard exit. That's 1 unit of risk. That's about 1 unit of reward. So that's +1. That feels like an SSC. It's sold off, holds support, crosses the dragon, hits the PSAR. That's an SSC. There's a standard risk box. I'd like to see it do this. It has to get above that line. Whoops. Has to get above that line to be interesting. So that's the tactical space. Oh, what a grind. Never really get out of there. So that's about That's about an R. That was a real grind. And all I did was take essentially the PSAR. You might have also taken the bottom of the dragon. Same thing. It meets there. Here's the entry. There's the exit. There's the risk. There's the reward. And that's about +1. Caught a 2 re-entry. Because here's the low. Here's the higher low. It didn't fail. It reversed and takes out the PSAR. Standard entry. Standard risk box. Check or hold. And nothing. So that's about what, +1? And then 1 in the morning. So +2. Tesla using $6. Had a nice tight close here. Crosses the dragon, takes out the PSAR. Standard risk box off the low of $6. So I just buy it. This would be if this violates, then I'll be short. Check or hold. Calling that a CD. Yeah, so all this one did was ran up, rolled down, and I got out of there just in time to avoid a disaster. But then a 1, 2, 3, I was really tempted here. I didn't have the will. Because the whole market was starting to be weak here, and Tesla didn't feel like it had the juice. Because there's a high, lower highs, crosses the dragon, hits the PSAR, short entry, standard risk box, check or hold. Basically nothing there. It had 1, 2, 3 bars to fail, and it didn't. So I just scratched it, and then it rolled over. So I ended up getting short again. Standard risk box. Was able to pocket a little bit, maybe half an R. So it was able to capture this much from the short here to here. What pattern do you see? Sell off, a low, crosses the dragon. There's the PSAR break. SSC, standard risk box. Let's see it work right away. Oh, it did. Nice. By this time, I might take half of that. That wouldn't be crazy. That locks in about 1. And the reason that's probably a good place, I hope I put it there, is, you're looking at this resistance level. That's where it failed. So if this comes all the way back out of the cellar, comes out of the basement, comes back to here, and then stalls right here and starts to fail, you're not allowed to be surprised if it does that. I mean, you would love to see it do this, and it might just muck around here, but you're not allowed to be surprised if it fails, because that's what it did here. Big fail. Check or hold. And that's about the exit we got. I given back too much on that. I don't know. And I was going to take half of that, and I feel like I gave back 1 and probably kept maybe 1.5.